Hello, and welcome to another update video on XRP. I'm here on the XRP short-term chart, and you can see that the market is trying to form a low. The wave count to the upside, to the downside is full, okay, but we haven't exactly reached the 100% extension. Do we need to reach it? No. I mean, we've come close enough. We're in that zone between $2.05 and $1.92. We can narrow down targets a little more by using Fibonacci extensions. We've come close to a few cents. So I'm very much watching for signs of an upside reversal. It is good, in my opinion, that the price broke briefly, at least, below the 4th of November low. Why? I explained it in videos many times. The problem was that the move up after the 4th of November low was what we just call corrective in nature. So it was simply a three-wave bounce. And a three-wave bounce doesn't really give us a proper upside reversal signal. We also had a three-wave bounce after the 17th of October low. And clearly that wasn't the low, okay? And a three-wave move up is just an indication. It's just a corrective bounce, a dead cat bounce, which just can, reverse again. And I mean, it's good to tidy all this mess up because the price now has the possibility to generate an upside reversal impulse again, which is not possible if the low is based on a corrective formation, you could say, right? So after this three-wave move up, the price didn't have the possibility to form an upside impulse because impulses do not consist of three-wave structures. So it's always important to understand that a corrective base has a lower likelihood of upside follow-through. And so this decline is not unexpected at all. The market has dipped below the previous low, and we are now approaching the 100% extension. We have not broken yet above the upper boundary line of the trend channel, so clearly lower is still possible. Even with a break above the trend channel, it's really only a first indication a low might be in. What we would need for further evidence is a break above the last high at around $2.24, and then follow through with a break above $2.52. So a lot of work is still needed from a bullish point of view. Eventually, what I said to you before is like all these levels here that we're discussing within this range, they are not so meaningful. But it's good to see that we've now seen that one more low. Now, saying that they are not so meaningful is not entirely true. It's just that if we break micro resistances here in the range, that's kind of positive, but it's not really meaningful to confirm a full-scale upside reversal. What we needed was a proper 5-wave move up followed by a 3-wave decline, a so-called 1-2 setup. And we want to see a break above this pivot here in the area between $2.69 and $2.84. Over the last few weeks and months in which we've been tracking this correction, the market hasn't been able to do that. So this is the next objective for the bulls, get a break above this zone. This is very important. This is still the level that I've been highlighting already since the 10th of October flash crash, because we had this sell-off and the market just couldn't break back above the pivot. This is where the selling volume started to come in and the key resistance level. So I, of course, keep you updated, but that's what I'm watching for. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you're interested in additional updates, then also check out our X channel for additional updates, news, and much more. You can find a lot of additional updates here. I posted a Bitcoin update before this video, for example. So you get a lot of bonus updates there. Check it out. Thanks so much. Bye-bye.